All right, ladies and gentlemen, how you guys doing? We're going to get started in just a couple of minutes. Let me go ahead and, okay. All right, good evening, good afternoon, and hello, ladies and gentlemen. Welcome to Bulls versus Bears. This is the weekly chart and market outlook for the first week of July. Happy Independence Day for those of you in the U.S. celebrating the birth of a nation, 1776, United States became a nation, free nation, and it's really cool. We have barbecue, we have the fireworks, big fireworks display. I'm down here in Austin, Texas, and just going to, my daughter has orientation tomorrow at UT. Hook 'em horns, woo, okay. But for a lot of people, after the freedom of the United States and the freedom of the country is great and all, but if you have to go back to your job on Monday and Tuesday and go to a place that you don't want to be at, then you're not really free, right? So it's good to celebrate freedom, but be very cool that this time next year that you can celebrate your financial freedom, and you can do that through trading the Forex market. And that's why I'm committed to helping struggling traders, make more money quickly, without having to buy and hold and be at risk, using the process and the method of Forex scalping. Okay, so we're gonna the first things I like doing before I just start trading is actually looking at the landscape, the 50,000 foot picture of the market, and planning. The Sunday, Monday is where I do my planning, because if you fail to plan, you plan to fail, right? That's some wise words there. So I hope you guys are okay. Hope you guys are doing great, and you are ready to go for this trading week. And it's my great pleasure to be with you today. Okay, so I'm going to, first of all, one of the top tools I want to use is my market heat map. This is my arrangement of currency pairs by percentage change, but it's a whole lot more. It's a number of tools. There are 6 powerful heat maps that tell me what's going on in the market. But there's also a trader toolbox, and the trader toolbox is very important. The trader toolbox gives you information at your fingertips, like the economic calendar, like sentiment indicators, like liquidity indicators, and a number of other things that I like looking at in order to take the pulse of the market. The market's like a patient, and you're the doctor, and your goal is to be a surgeon to extract pips, right? We're not pulling out tumors and things like that. We're pulling out pips, and the market will give us pips if we can correctly diagnose the market. Is it bullish? Is it bearish? Is it risk on? Is it risk off? Okay, so let's get right to it. I'm going to, by the end of our time together, you'll have a complete picture of how to approach the market. Okay, so let's go ahead and go right into my market heat map. And we're going to go to the tool section. We're going to go to the economic indicator. There are a lot of things here. There's different heat maps for equities, commodities, crypto, Forex, and also global stocks. And there's charts, quotes, economic calendar, financial news stream, market hours, technical analysis screener, national holiday calendar, currency correlations, currency calculator. Plus, there's also tutorials and bonuses like an 81 course, a basic course to teach you Forex, 81 videos, all included. And we have a very special limited time offer of $49.97. You can try it for $1. If you don't like it, then guess what? You can get your $1 back, right? All right, let's get back to it. Okay, so we're gonna look for Monday. We've had some, which is today in some parts of the world. It's 12:30 a.m. here. So we're looking at what's coming up. At about 4:30 Eastern time, we have the UK Market Services PMI. That's going to be a high impact item. 61.7 is a forecast. The previous number 61.7, and as a purchasing managers index, so it's going to gauge the bullishness or the bearishness, basically of the purchasing managers. See if they're buying things, ahead of time, that they're optimistic about the market, and so it's a survey. And so when that comes out, we could see the pound rally. It rallied significantly after non-farm payroll. Non-farm payroll was this past Friday, and 850,000 jobs were created, and the high estimates were in about 700,000. So this was a blockbuster number, and we saw the dollar actually sell off. Dollar usually sells off on good news, and the other risk appetite currencies rallied. So we may look to see a continuation of this rally when this number comes out at 4:30 a.m. Eastern time. Actually, are we in Eastern time right now? Yeah, 3:30. Okay. Let me check my clock. No, this is, yeah, so it'll be 4:30. Okay. RBA interest rate announcement is also tomorrow as well, so the Australian dollar will be in play. And remember, interest rates are the biggest drivers of currency. So anytime you see a central bank announcement, that's going to create a lot of volatility in the currency, right? So we're not going to be trading Canadian dollar, okay, because it's not CAD, it's AUD, because it's an Australian rate decision. So the currency that will be impacted is the Australian dollar. And again, if you don't have access to a economic calendar, you can always go to my market heat map, and you can try it for $1 for 7 days. And you can have lifetime access to it for a very special price. Okay. We also have the RBA rate statement. So the Australian dollar is going to be in high demand, or we're going to be highly sold off based on the announcement. But we might see a continuation of the uptrend, and we'll look at the charts a little bit later. Okay. On Tuesday, July 6th, we have the RBA governor's speech. So Aussie is going to be in play. Look at all the news around the Australian dollar. Again, at 4:30, we have the market construction PMI. That's going to come out as well on Tuesday, July 6th. Now, Wednesday, July 7th, we have the FOMC minutes. FOMC is the United States Central Bank. And basically, they're going to talk about, in the minutes, to show how they came about their decision about rates, about inflation. And so you might see the other currencies kind of move sideways in anticipation of this announcement. That's going to be at about 2 p.m. Eastern time. So you look at the euro, because the euro is called the anti-dollar. So anytime you want to trade U.S. news, you really want to look at the euro. Okay, the euro is one of the most widely traded financial instruments in the world, and you look at Forex trade $6.6 trillion a day, and maybe crypto on a good day trades 94 billion. So about 80 to 90% of the volume is going to be through the euro and the euro dollar cross. Okay, so we'll look at that on Wednesday. The euro will be in high play there. If FOMC minutes come out dovish, then we can see the dollar actually sell off, and the euro could continue to rally. And then the RBA is in play again. The RBA is speaking 3 times this week, so that really tells you that the Australian dollar is going to be is a currency that you need to be focused on for the week. Okay, looking at Thursday, there's nothing really going on Thursday. That's high impact. Friday, July 9th, is my dad's birthday, but it's also a manufacturing production month on month. It's going to be at 2 a.m. Eastern time. It's going to be a UK manufacturing production month on month. That means you're looking at 1 month compared to the previous month. Okay. And there's no forecast given, but the previous number was negative 0.3. Oops. And then also another UK number coming out Friday. That's GDP, and that's going to be stands for Gross Domestic Product, and that talks about the economic output of the country, and that's going to be again impact the British pound. Now at 8:30 a.m. Eastern time, you're going to have the Canadian dollar is going to come into play with the Canadian change in employment. The previous number was negative 68.0, and that number is actually going to get better, forecasted to be better at negative 20.0. Okay, and average hourly wages year on year. That's another Canadian economic point. So looks like mostly UK and Aussie and Euro. Those pairs we want to be focused on because that's going to create volatility. The news creates the wind in the sail Think of the currencies are boats, right? And the wind from volatility actually blows those currencies. And if you're in the currency and it's not moving, it's probably because there's not any news around it. And so some of the times that big players will actually take positions in the market, maybe even a day or two ahead of the actual announcement. And your indicators are also, we use in our mentorship, in my scalping mentorship, we actually look at institutional order flow ahead of these numbers in order to forecast, when those guys, because remember, these guys are like big elephants. They're huge. They have to move billions of dollars in order to turn a profit on billions of dollars or hundreds of billions of dollars. So but if they jump in the market at once, they'll make too much of a ripple, and people will jump on board, and they won't make any profit. So they have to be quiet. They have to do it in blocks, and those blocks create different types of patterns in charts. They create different patterns in indicators, and by putting all the pieces together, we can see where they are and actually get in beforehand. In fact, one of my students, Michael, got 83 pips during non-farm payroll. He was in, we were all talking about in the chat room that, they've already telegraphed what they were going to do. They were going to sell the dollar and go long, right? In fact, that was my first trade to get long the euro. So we already had it. We already had positions ahead of time. So it's almost like having inside information, right? So if there's something that you would like to see how we do or find out more about, make sure you go to EliteTradersUniversity.com, and you can go to our website here, and you can get our free income blueprint income boost ebook, and you can also sign up for the free masterclass here as well. And if you want to take the next step with us, you can also apply and see if it makes sense for us to work with each other and see if we can help you achieve your goals. Okay, so there we go. For that, let's go ahead and get into the technical picture of the market, the part 2. And the first thing I want to start off with is looking at the US dollar index. US dollar index, DXY is the ticker in it. And they call it the Dixie, a Confederate monument, I guess. I don't know. DXY, like the Dixieland or something, anyway. But anyway, what we're going to look at is this is the US dollar, and it's a basket of currencies versus the US dollar. I'm looking at a 4-hour chart, and we had a very bullish move off of basically the Jay Powell, or the FOMC chief Powell, talking about they were thinking about doing something about inflation, and that caused the dollar to rally. Okay, that caused it to rally to a Fibonacci level from this old high back on March 30th, 2021. Okay, so if we take a Fibonacci from that area, we're running into a lot of resistance. And this dollar rally is probably, for the time being, going to be, we're coming against the 786 Fibonacci resistance, rejected at 92.59. We see the rejection perfectly right there, coming down, and we can see maybe a move down to the 38% retracement, down at about the 91.50 area would be a place of possible support. Because the dollar, that's one of the major currencies, is part of that major group, because the dollar is one part of the equation. Now, if you know where the dollar is going, you know where the other currencies are going, right? So basically, I'm telling you, one of the tricks here, right? That if you know the dollar is going down, and basically we're hitting resistance, we'll see the dollar come down. So guess what? We're not buying the dollar, right? We would be actually getting long Aussie dollar, looking to get long pound dollar, looking long euro dollar, looking at short dollar CAD, short dollar Swiss. Dollar yen, I wouldn't apply this to that equation. That's a whole different topic. But the currencies I told you about, basically the dollar is in the driver's seat. And wherever the dollar is going, the other currencies are the anti-dollar. Okay, so let me go ahead and move over to the euro dollar to show you what I'm talking about. So what you talking about, Greg? What you talking about? I'll show you what I'm talking about. EUR/USD. There you go. Now, these are weekly support and resistance lines drawn, projected into the future. And we can see the rejection pattern down here in the euro down at the 118.30. Bears kept taking prices down, took it down to this line that was actually a weekly line from probably several years ago, because price has a memory. You can see that we hit this back in 2020, the same zone, and the moment we hit that zone, we came back up. You can go back a little bit farther, where we just danced around it, bounced off again. So you can go back several years and see where these zones are. And why do I draw them on monthly charts and weekly charts, and then drop down to our lower time frame charts like our 1 hour, right? And we can see where where this rejection is. So Greg's a lot of lines there. It's like, actually I just drew a few lines on a weekly chart and a monthly chart, and all these lines projected into the future, right? And you can see that these weekly lines just, prices respond. Price has a memory. We penetrate the 118, drop down here for non-farm payroll, and then we shot back up, retested the line, came up and tested another line, and now we're forming some type of a pennant, an inverted head and shoulders. We have a shoulder, head, and shoulder, right? So if this is a typical head and shoulders pattern, now head and shoulders it's a pretty good pattern. We have better patterns that we use in mentorship that will give us in, that would have got us in, that got us in much earlier, right? That was a shaker. If you saw my live trading, I rookie move. I took it long, but then got wicked out on that little market maker little wick. But we went up, we pulled back, right? So this is our, and let me show you, Greg, I don't see a head and shoulders pattern. I go, don't worry, bear with me, okay? We can go over here to this head and shoulders here, and we can go shoulder, right? Armpit, I call it, head, and another armpit, another shoulder, right? So that's our inverted head and shoulder, and that's a very bullish pattern. That's an extremely bullish pattern. In fact, it's one of 42,000 patterns that you can find in Thomas Bulkowski's book, Encyclopedia of Chart Patterns. But usually when we have this type of a pattern, price usually goes up substantially. We can take a measuring objective from this neckline. This line is called the neckline. You have your shoulder, head, shoulder, a neckline, drawing a line from the neckline to the head. And actually, the tip top, that wick is actually the top of the head. And actually, we can draw that line a little bit, so like it's straight, right? And then usually the way the math works is that, now it doesn't happen all the time, but a good portion of the time we usually get, we can use confirmation and say, hey, we got a break of the trend line. We can place our stop below the shoulder, and then we look for 119.39 possible target, right? And we would say this thing would fail if it got below the shoulder. Is if you want to give it some more space, then you lower your position size and have your stop below there. But then we would look for 100% expansion. We take the height from the head from here to here, measure that out. It should pretty much come to here as well, right? And so from a move from 118.70 to 119.39 is about 69 pips. Again, this is just a projection, just a forecast, just my 2 pips. This is for educational purposes only and not recommending anything at all. I'm just showing you that this is in technical analysis, we deal in probabilities, and if we're wrong, hey, we get short below the low and let this thing totally fall out of bed. Could possibly do that. But the way this is kind of moving, and also the euro is the anti-dollar. The dollar I showed you on the DXY looks to be heading south, heading down, which means the anti-dollar, the euro, would be heading up. That's the prognosis there. So I'm looking at 119.39. So in bulls versus bears, I say euro would be the bear, I mean, here's the bull. It hits, bulls use their horns and knock prices up. Bears use paws to paw prices down. Okay, does that make sense, guys? I know you might be saying something in the chat box. Give me a thumbs up or a like or a heart or something if this makes sense to you, and let me know that you're out there and this makes sense. And I'll go to the next currency pair I want to look at. Was this, we're just gonna go just for the ones that are gonna be in play for this week. I showed you the euro, I showed the dollar, we'll show the pound dollar. You see that, okay, a lot of lines here. We can see here, same way we had penetration below the 137.94. Almost got to this weekly line here, 137.14. Buyer, strong buying stepped in, and we have another flag formation, another kind of bull flag formation where price forms. This is the flag pole, right? And we can take a line from here to here, a line from here to here. So we have our pole, and then we have our flag. Okay, so this is a bull flag, and then usually we take the height of the flag and we project it out from a breakout above the line, and that would give us a possible target here. That would take us to around the 139. 39.38, so that's like 106 pips on that, on a possible move here, right? Again, if we had a flag pattern and if it broke the low, then the flag would be invalid, right? So that would be, so this is our swing. This is where price turned around, and it turned at that point. So that means someone got long and they placed their stop below the low. So guess what? If price comes back and hits that stop, the Forex is a stop-driven market. So when people are stopped out, their buy orders become sell orders because it gets them out of the trade, and that drives price in that direction. Similarly, someone is probably short the pound, right? And if they're all short, they place their stop above the high. So if price moves into their stop, then guess what? Their stops become buy orders, and that creates your short squeeze rally and drives prices higher. That's like in the GameStop, lots of people were short, and those stops were really buy orders in the market to close those short sellers out who were betting on price going down. So people are betting on the pound going down when they're stopped out, or if they're stopped out. That's going to drive prices up, and winners, or the losers, pay the winners. So this is the thing that we're possibly looking at there. Okay. So again, we're at currently about 138.19. I have a projection of 39.34. Okay. And we can go a little higher there. There's some gaps here that might need to be filled. At 39.68 and the old high about 140, the figure might cap out the gains here. But as long as the dollar is weak, we should see the pound continue to move higher. Okay. The next currency that's on our list that's based on the economic indicators that we're looking at is the Aussie versus the US dollar. Again, we have a lot of RBA things that are going on, and you can see we were projecting some prices in. We got not only did the ABC, it was an ABC all the way down and made to a new low. Okay, so let me go ahead and get rid of that. That did work out rather well for us. We do cycle analysis and things like the advanced stuff, but I'm just giving you some for you guys just getting started and just keep it kind of simple, just a real simple analysis of what's going on, where we have a really long continuation, and we went down below weekly line, we went below it, and then now we've popped up above it, right? And we had our alternative count, and this is pretty bullish from what we're looking at, right? Again, another flag pattern. Again, the flag has a flag pole, and you can see the pattern, the patterns on the majors. That's when like trading the majors. I know a lot of people don't like it. Oh, they're boring. They move kind of slow. But I can base analysis not just on. I can base it on flows into bonds, because if things are flowing into bonds, they're flowing into the U.S. dollar, and that creates demand for a dollar and causes our rates to fall, right? But on the other hand, if the dollar is, if people are moving out of the dollar and moving into riskier assets like the Australian dollar and New Zealand dollar, then what we'll see is these assets will move higher. It's a risk-on market. Australia produces copper, iron ore, and a lot of resources that fuel an economy that's growing, right? So if you build houses, you need copper pipes, you need copper wires, you need copper, okay? And Australia is one of the largest producers of copper, iron ore for building, cars and rail and transportation. That's very important as well. So if the economy is growing, the demand for what Australia produces goes up, and guess what? It increases the value of the currency. So that's what we're looking at. So as we unwind from COVID, unwind from the COVID trade, we start becoming more bullish about what's going on. It's really nice to see people's faces, going to restaurants and things. We just got back from a really cool Mexican restaurant here, and tacos palenque. It was good food. I had a fajita plate. It was primo. So here we go. We have our bull flag, pull back, and so we look for an extension. So I'm going to clone this line like a sheep. Clone it. Bring in the clones. Bring in the clones. All right. All right. Boom. So that's our expansion target. Little trick there. Again, you take the height from the top to the bottom, okay? Project that into the future, or into and then so you'll have your target, right? That's 100% expansion. This is what your Gartley, your Gartley butterflies and all that stuff comes from, right? But this is the simple. This is the Greg McLeod cheat version, because Bill Gates said that. I know he's controversial now, but if you want to get something done, find a lazy person to do it, because he will get it done faster with less work, right? And believe me, I don't like working very hard. That's what make money fast and easy, right? Not get rich quick, just get rich easy. Okay, so there you go. So this is Gartley. This is the pattern 222. And if you were to go to one of Gartley's workshops, it cost like $1,500 back in 1933, which is like $15,000 in today's money. He would teach you this process of the length of A and B with a pullback for C, and then that would give us a projection target for D, right? And at point D, it gets kind of sketchy where, he would sell at point D. But I'd say if I've got A and B and I got a C, then I know there's going to be a D, or I have a high probability, because there's no 100%. There's no holy grail where it's 100%. But I have a good idea that this C will move into this D. Well, then why don't I can wait for some confirmation. I can wait for a trend line break, place to stop below the swing low, and then go for this, right? And we can even map this out as a long position. Again, this is not a recommendation. This is just how I approach the market, right? And is that interesting to you to find out how I approach the market? Is that helpful? Let me know in the chat box if that is helpful. Or say, hey, Greg, be quiet. You're wasting my time, man. I'm a troll, dude. Look at me, man. I got a pointed hat. I'm a troll. No, okay. No trolls here, right? No troll zone, okay? So that's the risk. So you see the risk is small versus our gain, possible gain, if we were, again, possible gains about there. And that would be a 3.29 to 1 risk-reward ratio. Okay, so if we got something like that, well, guess what? I can scalp that, repeatedly into this direction here. right? Okay, so Australian dollar, bulls versus bears. The Aussie is a bull. Okay. Let's go to the last one we'll look at is the Canadian dollar, USD CAD. Okay. And I'm going to throw a bonus one in there. I know people are like trading gold, and I haven't analyzed gold in a while, so we'll see if I'm a little rusty. Oh, but gold doesn't rust, right? So we go. So we got a nice, this drop, right? A pullback, and this is maybe a counter trend rally against the trend. And so I would, remember this is the dollar. We've already checked the US dollar. The Dixie, the DXY tells us that we should see a weakness in the US dollar, which means probably a strength in the Canadian dollar, which is the opposite, right? And we can, so we we could get a rally up to 23.69, which would be a very good possible short that we can take a look at. We can also take a Fibonacci from the highest point that the Canadian dollar has done this month, right? Which was at around the 1.2454 area. And we can get down to the to this 1.2304. Oh, come on, work with me. All righty. Now, we're currently at the 23% retracement, and usually that's kind of a fake out move. We might get a little bit higher, maybe 23.62, right? But anyway, if we see some type of a break of the trend, we can see a retest of the 123.05 area. So we're looking at this. Now, usually we have like Manic Monday and Turnaround Tuesday. So Monday usually goes in one direction, and then Tuesday through the rest of the week, goes a completely different direction. Okay, so this looks counter trend because this is very strong, lots of red, right? And we can see maybe some type of retrace. There's a little stick sandwich right there, marking, the market makers almost like they mark the spot where they want to take price. They might want to take it up to like 23.68, and then suck people in. And then, boom, we can even take a look at sentiment analysis. Let's take a look at sentiment on the dollar CAD. Now, sentiment, remember, the markets are not like a beauty contest or an election where people, hey, no access. Hey, don't you know me? I'm Greg. You need to pay your bill, Greg. It's like, I have lifetime access. All right, who would give you lifetime access? Okay. So we go to sentiment. We're going to look at dollar CAD in sentiment. And pretty good. And we go to currencies. There's a pop-up that comes up. You can close that out. And then we're going to look at USD CAD. And it should be in alphabetical order, but it might be, it has a lot of different USD RON. Hey, what's RON? What currency is that? Let me see, make sure I'm on current instruments. Oh, I'm going to be on currencies, right? Okay. Yeah, here we go. Well, yet 71% of people are short. 28% of people are long. Okay. So this tells you losers pay winners. There's a whole lot of people short the Canadian dollar. There's no way they're going to get paid. Okay. When you have more people short than long, then losers will pay the winners. So the losers are short, and the people who are long dollar CAD are going to get paid, or usually. Okay, we can look at. So that's we looked at the instrument. Let's go to Let's go to the instruments. Let's see if I can find the currency pair USD CAD. USD slash CAD. There we go. Oh, here we go. So 72% of the people are long, right? 72.3% of traders are long. 27.97 are short. Okay. So guess who? You can't pay 72% of the people with 27.97%, right? Those people. But losers are going to pay winners. There's so many people on this side. They're so long that they're going to pay these few. Okay, that's how it works. Okay, so if all your friends are in it and they say, "Hey, come on in a dollar CAD, let's all get along," don't go. don't go, don't go, don't go, right? it's gonna, usually the boat's gonna tip in the other direction, okay? So let me get back to dollar CAD. So we may see this counter trend rally continue, 23.62, and I would like to see a break, and I see, this is another one of our patterns that we use. And then we can see that the 100% expansion target, this is a flag. It's a reverse flag, okay? And then if you're from Canada, then it's not, you say, Greg, it's not a flag, it's a hockey stick. And I go, okay, I see. It can be a hockey stick. And since it's dollar CAD, I'm going to call it, this is a bearish hockey stick, right? And then, so let's take the bearish hockey stick, just like the flag, right? I'm going to take the top, measure the top to the bottom. I'm basically taking a Drake song from the top to the bottom, and now we're here. We're going to play it backwards, right? Play the Drake song backwards. We're going to clone this like a sheep. We're going to take this line, and it's so long, it kind of tells you, ooh, guess what? What? This is how far we're going to go. We're going to project it from a break. Now, the break, if it's at the 30% retracement, then that will be our break. It may break at the 618 or the 50% retracement, but anyway, that's still going to be a long way. Now I'm going to scroll this up so we can see how far this could go, and we're looking at 22.25. Okay, so this would set up to be a pretty good trade to the short side. So bulls versus bears, dollar CAD as a pair, I'm bearish. I would be bullish Canadian dollar, right? So that is how we would actually find that out. So again, going back to the economic calendar, which we probably, we can go back to the economic calendar, and we can say that those are the currency pairs I would be looking at. I would look at the euro, the pound, the Canadian dollar, and the Australian dollar, right? Those are the ones, you say, oh, you want to trade this? Well, you want to trade that, that's cool. Trade New Zealand dollar. If it doesn't move, don't blame me, right? Because that's not where the party is. We talked about where the party, you want to trade where the party is. And I don't see a New Zealand flag anywhere on this economic calendar this week, okay? So definitely we would like to take a look at those. If you found this helpful, make sure you like, subscribe, share it with somebody, tell a friend, hey, this guy Greg, he's full of crap, man. Let's look at him, like, laugh, or hey, this is actually pretty good. I think I learned something. So whatever it is, share, have a great time. And again, if this resonated with you, you think you could possibly want to be my student and learn what hundreds of other traders have learned from me over the past 20 years, then feel free to come over to the Elite Traders University website and apply to become part of our next mentorship class. Okay, it's inexpensive. It can be expensive, but if you can make more than what you put in, then it's pretty good. It's an ROI, right? It's an investment, right? But however, if you're just getting started, or just kind of like need some place to get started, some guidance, I recommend my Income Boost Blueprint ebook. You can get that for free. Just enter your email address. I won't spam you. I won't sell your information, but there's some good information to help you get started and to help you learn about the markets, okay? And also make sure that you join our free Facebook group, the Forex Cash Machine. You can go over to the Forex Cash Machine Facebook group, which is our Forex scalping group, where you might be watching it here. And I want to thank you guys for being part of the group. And there it is. We can go to Forex Cash Machine, and you can join our dynamic and ever-growing group. And there's tips, there's tricks, there's videos, there's posts, and all kinds of things that can help you take your trading to the next level. I want to thank you so much for watching and being part, and I look forward to helping you in your trading in the future. See you on the inside. It's Greg McLeod signing out. Peace and pips. Cheers. Bye.